You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. Happy Monday. Today we are answering a question actually from one listener a while ago. Like a few weeks, I don't know, ask about Sun Life. And at that time, Sun Life reported their earnings, the stock price dropped. So, of course, a little bit of anxiety around Sun Life, like what's going on while the stock is not going that well. I mean, amazing 2024 results, and then 25, it's going down. So is it an opportunity? Or is it like a company that is about to crash and burn? So we're going to take a look at that. But I mean, I'm going to let you know up front, probably not a company that is about to crash and burn. So what Sun Life does? Well, Sun Life is among the three biggest life insurance company in Canada, along with Manulife and Great-West Life. It has been quite a good run for the three of them over the past few years. And now it's probably time to see if there's more growth to come. So Sun Life, its playbook, quite easy to understand in a sense where they have like three different business segments. The first one is individual life and health insurance. They actually bought DentaQuest in 2022 to become one of the largest dental health insurance company in the US. They also have like a group life insurance along with retirement services. That is the second part of their business. And the third one, super important actually, asset management. So they kind of like go with this cross-selling opportunities as one of their growth vectors, as they are able to like sell life insurance, and then they say, hey, you know what, we can do your retirement planning, we do asset management. And of course the asset management part is a very interesting business model because it's first a sticky business. You charge a fee on the assets under management, so a lot of recurring revenue, and definitely a place where all the three big life insurers in Canada, they kind of move a portion of their business model over there. So the point is a little bit harder to make a lot of money from the life insurance policies. I'm going to get there in a second. So right now, Sun Life generates about 40% of its earnings from the asset and the wealth management, about 30% from traditional individual protection products, and then another 28%, 30% about group and health insurance. So that's pretty much how the company is doing. In terms of growth vectors, as I said, cross-selling opportunities between multiple products. So it's great to have like several different products to offer to the same client. The other thing is, of course, asset management, wealth management, retirement planning, big thing. As the population gets older and live longer, retirement planning and asset management are like very key component. So there is a lot of growth to be going there. Sun Life is also have a pretty good foot in the US. So going US also is a pretty interesting play there. With the acquisition of DentaQuest, as I mentioned earlier, they're now a big player in dental healthcare. So again, another place to grow. In terms of economic moat, there's not really a competitive advantage. That's actually more like a flaw than a good thing for Sun Life. Life insurance policies and products are a lot more seen as a commoditized product these days. I mean, think about the last time that you reviewed your life insurance. You get some quotes, and your purpose is just, okay, let's say you need like $1 million life insurance policy on your head. Well, you're just going to go for the one that offers you the best deal, right? There's not much additional value to get with the most expensive life insurance policy. You're going to go with the one that has the smallest cost. So it's hard to differentiate. Actually, it's kind of funny because I'm not even sure which company I am insured. I know that I have insurance. I know the terms. I know like how much and everything. But the company behind it, I don't really care. I don't care because I mean I got a good deal that fits in. That was like a competitive price, and I'm covered. And in Canada, they're all like insured anyway, so I don't really have to do much more digging than this. And there you go. So not a competitive advantage. In terms of numbers, let's take a look. Like we have like a pretty decent investment thesis here. We have an interesting business model, making a lot of money, well diversified. So pretty compelling investment thesis. How does it translate into the dividend triangle? One thing I don't really like about life insurance companies is it's really hard to follow their revenues. It's not something that is super interesting in terms of like metric. So we have to rely a little bit more on earnings instead of like looking at revenues, because it's going to like move a lot more than for a regular business. But for earnings, over the past 5 years, it has been a good time for Sun Life. One thing that helped, but now it's over, is the interest rate. So when interest rate, because you have to understand that for life insurance companies, they have to invest like the premiums they get from the life insurance. They have to invest that money, and the goal is to make more money with this. So when they have any claims, they make money and they have like profit left, but they still need to put a lot of money into bonds. So whenever the interest rates are increasing, that's bad for their bond portfolio at short term, because that will have an impact. But when it's decreasing, then it's the opposite. So in an ideal world, life insurance companies would do better with like relatively higher interest rates but stable, so then they can have bonds that are paying an interesting interest rate, which we have right now. How fast the interest rate will be cut by Bank of Canada will have an impact on their earnings, but this is pretty much just over here. Very generous dividend grower. Sun Life has a high single digit dividend growth policy for several years. So anything between 5 and 9% every year. So that's great for income-seeking investors. On top of that, you have like a good yield. So it's a great balance between a company offering a decent yield, so about 4%, but still have a long history of dividend growth, a very generous history of dividend growth. So everything there in terms of numbers, back the investment thesis, that makes sense. So now, if you are interested in that kind of stock, well, you need to look at the potential risk, right? And there are many. As I mentioned earlier, very sensible to interest rates. So they need to have bonds to pay some kind of interesting interest, which was not the case for a good decade. And this is why the stock price were kind of slow before 2020. There was like not that much growth around those companies, pretty much against that. But then they all decided to go towards wealth management, retirement planning, and so on. So offer more products. So that has been a plus. But in terms of competitive landscape, that also means that Sun Life has not only must compete against Manulife and Great-West Life, but also against asset managers, banks, and others. So you have a lot of people going after the same dollar here. So the competition is very fierce. Very tough in this market. In terms of the industry and the market, well, the products are commoditized, as I told you before, so you're not going to make a big difference. In terms of asset management, returns are super important. Making sure you don't charge too much either. So there's still a lot of like risks around an investment in Sun Life. And lastly, super important, underwriting skills. When you write policy contract, insurance contracts for life insurance or for healthcare insurance, super important that you write the right contracts so it is profitable for the company, right? Latest quarter in February that was reported, the earnings got hurt mostly because the company faced a lot of challenge in the US. So higher morbidity claims, also the health and protection segment were also down by 29% in terms of net income. So that was like really tough for them, in like with dental healthcare and their exposure to the US. So that is also a business vulnerabilities. When you're growing outside of your country, well, it's great. It's opened the door to multiple growth opportunities, but also could face some challenges. And this is exactly what's happening. In the meantime, actually, the company did well with wealth and asset management as well, so you don't have to worry about there. So that's the advantage of being well diversified. So in conclusion, a company like Sun Life, interesting play in the life insurance business. I don't really have like a super like player here. It seems that Manulife is doing a lot better than Sun Life and Great West, but all three are doing well. I'm still reluctant to call Manulife a great stock, even though as of late being reporting amazing numbers, but they took so long to come back that I'm still not convinced. I mean, full disclaimer, I do not have shares of Sun Life or Manulife, and I have I did a small play in my Smith Maneuver into Great West, mostly because it's backed by Power Corporation, but I would not necessarily argue for like day and nights to say which one is better. Sun Life has like very good metrics, compelling investment thesis, and I mean, the risks are pretty much the same for all of those companies. If you're looking to find more interesting stocks like this with a strong dividend triangle, I suggest that you download the Rockstar list, which is a pre-screen list of stocks, Canadian and US companies, already all showing a strong dividend triangle. So only companies with revenue growth, earnings growth, and dividend growth that are positive over the past 5 years. You can download it at moosemarkets.com/rockstars. This is my number one place where I want to when I want to find another stock that I want to buy. I'm looking to build a buy list. I'm going to the Rockstar list. I'm looking at the best companies with the strongest metrics, and I start my research there. So moosemarkets.com/rockstars. All right, guys, that's enough for today. I hope that you have enjoyed this review for Sun Life. In the end, I still prefer banks, but definitely an interesting company. Good rating at Dividend Stocks Rock as well. It's rated as a buy right now. And yeah, a lot of potential for this one. So, all right, guys, that's enough for today. We're going to talk again tomorrow. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.